Hey, welcome back to the Closer Room AZ. I'm Jesse Moreno. And if you've been following this series with Stacy Neal from Granite Bank, you already know. You already know a lot of information, right? She's been dropping a lot of good stuff.
Knowledge bombs.
All kind, right? Usable information for buyers, usable information
Yep.
for buyers here in the Phoenix, Arizona area, as well as and beyond. I think this
Sellers,
information, for as far as buyers, you can use this anywhere, but obviously we're here in Arizona, so. We have completed part 1 and part 2. We talked about Granite Bank, shared information about yourself, your background, how long you've been in the business. We talked about our the loan products, right? We talked about FHA, conventional, the HELOCs. We talked about that new program called the Cash to Win program, which is
It's pretty cool.
Pretty cool, yeah. And man, great information. Today we are going to start part 3 of this series. To me, it's one of the most. I feel it's one of the most important ones for me because it's real estate related for realtors. So we're going to be talking about what buyers are getting wrong. And of course, we're also going to talk about big mistakes people are making in this industry. We're going to talk about the confusion between pre-approvals and pre-qualification, right? The letter,
Huge, yeah.
right? We'll talk about that.
Yep.
And then we're going to talk about the rate debate, something called the rate debate, because I know people that are watching right now are probably asking themselves, when is the best time to buy a property, right? They're sitting on the sidelines. So we're going to talk about that and how the rate debate kind of blends in with that mindset of thinking. So sit back and relax, enjoy this, and make sure you guys are taking care of following the podcast series that we'll be talking about. So Stacy, welcome back to the show.
Thanks.
Glad to have you here today. So Stacy is branch manager and senior mortgage advisor for Granite Bank.
Yes.
Yeah? All right, so let's jump into our questions.
Yeah.
I think this is going to be some good stuff going on here. Let's talk about buyers' biggest mistake before talking to a lender.
Where do I start? The biggest mistake I think before talking to a lender is they start shopping, whether that's online, virtually, with a real estate agent, and they start falling in love with properties that maybe are outside of their budget. And then the conversation with me turns into a lot of disappointment because I'm having to kind of back them down back to their budget.
Right.
And I think that's the biggest mistake is starting to shop before you actually know what you qualify for.
Right. And here's another thing too. If you're already in escrow, if you already have that deal going, another thing too is be careful not to get into debt. Start taking, don't go buy a car.
Don't go buy a car.
Right?
Don't co-sign for anyone.
Don't
Don't take out a credit card. Yes. Yeah.
Right?
Yeah. Don't buy furniture.
Absolutely. I've had experience in the past where people, where my buyers are in the property, we're in the process of closing.
Yes.
And then they run their credit one more time and they figure out, hey, this person just opened up some credit, or they went and bought the furniture for their new home.
Yep.
And that's kind of what happens a lot. They buy the refrigerator or the stove.
The appliances.
The appliances, right?
Yeah.
And then things change really quick.
It's a thing. And we try to get them to not do it, but yeah, we do everything we can to kind of stop that dead in its tracks before it happens.
You guys got to be careful with that. And I think realtors know that for sure as well when they're working with their buyers. But the lender as the expert would tell you, hey, don't do these things. And I'm pretty sure at Granite Bank, yourself, when we get a deal into the process that we're getting them a checklist says these are things that you shouldn't be doing.
Yes, the do's and don'ts.
The do's and don'ts, yeah? Absolutely. All right, question number 9, that's on my list here, is the pre-approval versus the pre-qualification. This one's pretty crazy for me because I get people that say, hey, Jesse, I got a pre-approval or I got a pre-qual or vice versa. I'm ready to go shopping, right? And one of these, I think it's the pre-qual, is the one that really doesn't hold water. And then I guess what I'm saying is it's not really pre-qualified yet. It just got something that says, hey, I make so much money. The lender says, great, well, if you make so much and so, I think you qualify. Make sure you bring me all the following documentation. And so go ahead and start looking for a property.
That's the worst. I mean, I think it comes down to the lender because I will issue a pre-qualification, but I have standards. I will not send that out unless I've seen all the documents and can check all those boxes, yes. In Arizona, we're the only state that has a pre-qualification form. In other states, they call it a pre-approval form, and there's no boxes. So Arizona, we're doing something right because we're encouraging lenders to check those boxes. But if you're talking to a lender and that you haven't sent them any of your documents and you're all of a sudden have a pre-qual, be very concerned.
Yeah, for sure. Pre-quals, like I said a little bit ago, pre-quals really don't carry any weight per se, right? I mean, it's
Unless you have a lender behind you that's telling the agent, yes, I've
right,
seen everything.
right,
And yes, I have ran it through automated underwriting.
right. But a solid pre-approval will get you on the table. It's it's
Yeah.
easy. It's a better. It's a easier transaction or acceptance from the seller,
Yes.
especially the agent, because as agents we are making sure that we are looking at it carefully, what's best for our clients. So the pre-approval is really what I'm looking for.
Kind of the
Anyhow,
golden ticket.
it's
It's kind of the golden ticket because an underwriter's already reviewed your income. They've already reviewed all of your documents. They haven't reviewed the property yet, but they
Right.
know that you're a solid buyer and you're not going to have any issues once you do identify a property.
Yeah, for sure. So we want pre-approval.
We do. We do
Not
want
pre-quals.
pre-approvals. It just depends. If the income is complicated, I typically will always send for pre-approval.
Sure.
If it's not, then I'll issue a pre-qualification and my agents just know that it's good as gold.
Gotcha. All right. So this one here is the rate debate, what I call the rate debate or marry the market, right?
Okay.
So I'm going to throw some terminologies or some
Let's do
analogies
it.
out there.
Yeah.
All right. So everybody right now, and this is, everybody's got a different opinion on this one, but I'm going to give you mine.
Okay.
And then you tell me, hey, I agree, Jesse, or I disagree. I don't know, right?
Okay,
You let
let's
me
see.
know.
Let's see.
But I'll tell you what, buyers are scared right now about should I buy a property or not because of the way the interest rates are,
Yes.
right? They're waiting for the rates to change. They're waiting for the rates to drop. They're hearing all these things on the news, and the economists are talking about, wait till May, wait till September, wait till the end of the year, the Federal Reserve, all this crazy stuff is going on. I mean, really, when is the best time to buy a property?
When it's right for you. It's very hard to time the market. My recommendation is don't try to time the market because you will always be disappointed. Either direction. If you're waiting for the rate, even though rates were in the fives not too long ago, even those conversations, people are like, do you think they're going to come down? Because they're so used to seeing twos and threes that the fives also seem high. So don't try to time the market. Do it when it's right for you.
Yeah, there's a saying, right? You marry the market, but you date the rate.
Yeah.
Right?
Because you can always refinance.
Yes.
You can refinance that interest rate, which is what a lot of people did in 2020, 2021, when the rates were low. They were already in a mortgage. They just refinanced.
Right.
Wouldn't you rather be in your mortgage when the time comes and have it be just a quick transaction versus I got to hurry and go find a house?
That's right.
Let's not do that. That's stressful.
That's what you call dating the rate.
Yeah.
But like you said, rates will change. Rates could,
The market's constantly changing.
something could happen. You could refinance. You could get out of it. But when you marry the market, it's for long term. You're stuck with that. You're stuck with that home.
Sure.
You're stuck with that neighborhood, that community, whatever it is, right? So you're married to it. It's a long term relationship.
Yeah.
But dating the rate, it's an easy fix,
Easy fix.
right?
Quick and easy 3-week refinance, even less in some cases. So yeah, definitely get in when that's the right time for you.
Right. Guys, overall, the core message is this, and keep it really simple. Buy the right house now, refinance later when the rates drop.
Yes.
Right? That's the easiest way.
Easiest.
It's a temporary fix, but get you into your home that's going to build some cash value.
It's a great market for buyers too right
It's
now.
a win-win.
Yes.
All right. Credit score reality. Let's talk about a little bit of that because people talk about, hey, my credit score is, 620, 640, 700. When is a good time to buy a home based on your credit score? And people get nervous about that. And let me share this part from my perspective, because I'll tell you what, all my buyers, but buyers that I run into that I've helped out, they're like, Jesse, I'm just waiting for that credit score to just get a little bit higher to do something.
Yeah. It doesn't always make a huge difference. I think the biggest thing is that at any interest rate, you have to start somewhere. So it's about knowing where you're going. If you're at a 480, well, guess what? We got a ways to go, but don't you want to know how to get there? It's just information. You got to know the information.
Right.
You got to be armed with it so that you can make those changes.
Absolutely. And that's why it's important they reach out to you.
Yes, absolutely. Because
Right.
a lot of times 1 out of 10 are ready. The rest, the other 9, they might be working on some stuff.
Totally agree. I think if anything, please make sure you reach out to your lender. Reach out to Stacy here to help you out, because if you don't reach out, you're not going to know. And don't get caught up with, well, my credit score is this, I'm not too sure.
And it's not what is on Credit Karma. Let's
Not
just
with
make
Credit Karma.
that. It's not your Credit Karma score. It's a completely different algorithm. So just know that going in.
Right. Well, we're going to wrap up this one pretty quick, and we're going to get into our part 4 here shortly. But give us best way to reach you.
Stacy Neal Mortgage on Instagram, Stacy Neal the Neal Team on Facebook. My email, stacy.neal@granitebank.com. My phone number, 602-451-2473. Give me a call.
All right, we are going through this so quick. It feels like we're just flying through this,
Fine.
right?
Let's do it.
But a lot of great information. This is all just real talk that you guys are hearing here. We talked about the mistakes. We talked about the pre-approvals. We talked about the pre-qualification confusions, right? We talked a little bit about the rate debate. There's just so much information here. Part 4, which is going to be coming up, and we'll be flipping the script on this one. So we're talking about lender relationships between the lender and the realtor, which is key. And I'm going to put myself on the spot on this one as well when I ask some questions, because I think there's two sides to the story.
There is.
When there's a relationship between the realtor and the lender. So we'll talk about that. So make sure you guys stick around. This is really going to be key for you guys, realtors that are out there watching this. You're going to hear it straight from Stacy and what she thinks about us as realtors and investors. And then, of course, I'm going to share what I think about realtors, what I think about lenders. So I'm going to be on the hot list here too.
Come back.
Right? So
we might have some boxing gloves on. I don't know.
So we're going to do that. So stick around. Don't leave. Come back. Searches. Look for us. Again, if you missed part 1, part 2, get back into the podcast. You go to the Closing Room AZ. Look it up. I'm going to go in and jot it down. You guys could get a recap of what's going on, and it's going to be great information. Again, subscribe to my channel. Hit the QR code that you guys see there on the screen. I'm just going to get you directly to me, directly to the podcast site, and all my social media sites as well. And make sure you guys do that. So other than that, again, I'm Jesse Moreno. I'm with the Closing Room AZ, and where we have real talk conversations, where we drive real results. And again, have a blessed week, you guys. Thank you for hanging out. And remember, set no limits.